What's up everybody, I am Jaspreet Singh and I just got this text from a friend of mine where he said, my family member passed away and left me $3,000. What's the best investment with such a small amount of money? It's tough anytime we lose somebody, but I figured that's a good financial question that I'm sure a lot of other people have. So what I want to do today is go over 10 easy ways for you to invest $3,000 as soon as today. The first way that you can invest this money is by investing it into low-cost ETFs. Now this is something that I think pretty much everybody should be doing. An ETF is an exchange traded fund. And so it's the alternative of going out and investing in individual companies. If you go out and you invest in the Amazon stock, well, you get exposure to the Amazon company. If Amazon does really well, the Amazon stock will go up. But if Amazon doesn't do so well, then the stock will go down. So you're taking on more risk. And if you're not interested in keeping up with the company and doing all the fundamental analysis, then maybe you shouldn't be investing in individual companies. The alternative is you can invest in an exchange traded fund, which is a group, a basket of stocks. So a couple of my favorite ETFs would be the S&P 500 ETFs. This is something like VOO or SPY. Disclaimer, I own shares of VOO. They both give you exposure to the biggest 500 companies on the stock market, the S&P 500. So when you invest in one of those ETFs, now, you're not buying one company, you're buying a piece of 500 different companies. You have ETFs for essentially everything. You have the S&P 500 ETFs, you have ETFs that give you exposure to the entire stock market, you have healthcare specific ETFs, you have tech ETFs, you have innovation ETFs, you have emerging market ETFs. There's ETFs for pretty much everything, but the thing that I'm focusing on here is low-cost ETFs. A low-cost ETF means that your fees on your ETF are going to be low. So any ETF or fund or index fund that you invest in are going to have fees. It's called an expense ratio. What you want to do is, especially if you're just getting started, you want to look for something with a lower expense ratio, because a lower expense ratio means less of your money is going to fees, more of your money is being invested. So with a lot of these ETFs, the reason why they can have such low fee structure is because they don't have a person or a team of people actively managing and trading stocks. It's a computer. So with the ones that I was talking about, the S&P 500 ETFs, there's an algorithm where they know what the biggest 500 companies in the stock market are, and if a company goes bankrupt or if they fall off of this list, the computer will automatically kick that company out and put a new company in. That's why it's a low-cost ETF, because you have very little money going in fees and most of your money is being invested. The second way that you can invest this money is not through an ETF, but through an individual company, through individual stocks. Now the whole idea behind this is, instead of you just being a consumer like the majority of people, you become one of the producers like the minority of people. So now you're investing in the companies and products that you use. That way you own a piece of the company. That way when these companies make bigger profits, you benefit as well. Now obviously it comes with risk, because if the company goes down, then you can see your investment go down. But as you start to get more involved, you're going to want to do more research, hopefully, or you start to realize that maybe stocks are not for you, ETFs are better for you. But at the end of the day, it's a way for you to become a producer instead of just a consumer. Like right now, I'm in San Diego. I'm recording this video out of my Airbnb, and I've been spending a lot of time and a lot of money at Airbnbs. And so that's why during the pandemic, I became a shareholder of the Airbnb company. I'm not telling you what to invest in, but the reason why I invested in it was because I was spending 6 figures a year at Airbnb as a consumer. So I figured might as well be a producer too and own a piece of the company. Third, you can invest your money in startups. This one is very interesting to me because about a decade or so ago, or almost a decade ago, Shark Tank became very popular. And that was when I started watching Shark Tank, and I got very excited by this idea because you saw these sharks investing in entrepreneurs, and I was still kind of in the beginning of my entrepreneurial journey, and I knew I wanted to be a successful entrepreneur, and I loved the idea of being an investor in other companies. So it was always very exciting to me. And now that I have the opportunity to invest in startups, I really liked it. But it was always very difficult for anyone to invest in startups, because either you need a lot of money, you have to be an accredited investor, meaning you have to have a lot of cash and you have to make a lot of money, and you have to have the access to these companies when they're looking for money. That's very difficult unless you have a lot of money or unless a lot of people know you. But now, thanks to something called Regulation CF, which stands for Regulation Crowdfunding, it is very easy for anybody who has $100 to go out and start investing in startups, because there's companies out there, none of them are paying me, I'm just giving you some examples. There's companies like WeFunder, Republic, Start Engine. These are all platforms which allow you to invest in startups that are looking to raise money. Now, of course, this is risky. It's riskier than investing your money in the stock market because these are smaller companies that may or may not have proven themselves, that may or may not have revenue. So you're investing in companies at a much earlier stage. But if you hit a strong company and they're able to go grow, get acquired, or maybe go public, well, then you could see a major return on your investment. Again, it comes with the share risk, but I love this because now you have the opportunity to invest in startups that are looking for money. And this is something that I've been doing a lot myself. I've been investing in a number of startups. Like, for example, I'm an attorney, and I've always felt that the legal space is so old, it's so boring, and it's so expensive, even though it doesn't need to be. And so there's a company called UpCounsel, which has been revolutionizing this, and I invested in UpCounsel. I'm an investor in the UpCounsel company, which is working very hard to disrupt the legal space. So I love what they're doing because it provides cheaper and better legal service for people, which I love, and it also makes lawyers more money because now you have less money going to the partner, less money going to administrative fees. So it's a win-win-win, which is why I got behind them. I want to support them, and I gave them money, and I found them through one of these crowdfunding platforms. Fourth, you can consider investing your money in cryptocurrency. Now, before you go and jump and invest your money into cryptocurrency, to a whole bunch of different altcoins, hoping to get rich quick, let me just put this out there. If you are new to cryptocurrency, start with the basics. Start with something like Bitcoin, maybe some Ethereum. That way you can learn about it. But don't go and just start throwing your money in cryptocurrency because you hope that it's going to be the next way for you to get rich quick. You should only be putting your money in cryptocurrency if you've done your research and this is something that you believe in. Now, I invest my money in cryptocurrency because I believe that there's a lot of value in cryptocurrency. I don't invest my money in a bunch of different altcoins. I invest my money basically in Bitcoin, Ethereum, and then a couple of the smaller coins, but that's it. Most of my investment is going into Bitcoin, and then I have a few of the other ones. But if you believe in cryptocurrency, if you believe in the technology, you believe that there's more potential with it, then this is a place where you can consider investing your money. But you should also know that we're gonna see a lot of volatility in cryptocurrency, not just because it's a newer asset class, but because 2022 is gonna be the year of regulation in cryptocurrency. And so depending on what this regulation will look like, either it will open up the floodgates so bigger institutions will want to invest their money in cryptocurrency, or it will make it more difficult for people to invest their money in cryptocurrency. So you can see a lot of volatility in cryptocurrency, but if you believe in crypto, you think there's a lot of future potential, this is a way for you to invest your money and get exposure to that. Fifth, you can invest your money in dividend paying stocks. Now, the stock market, the reason why this is the third time I'm mentioning the stock market in a different form is because you can start investing your money in stocks with as little as $100, and it's so important because it is a very accessible way for you to now start investing your money and start owning assets and become a producer rather than just being a consumer. Remember, the whole minority mindset is about thinking differently than the majority of people. The majority of people make money and spend it. Where does the money get spent? At these big corporations. What the minority of people are doing is they either produce it or they own the producers. So when you own shares of these companies, you own the assets that are selling products. You need to do both. Obviously, you have to consume stuff too, and there's nothing wrong with consuming as long as you can afford what you consume. But the way that you can really build this wealth is you also become the asset owner. This is what wealthy people are working to do. And when you invest your money in dividend stocks, it's a very different mindset when you're investing your money, because now you're looking for companies that are paying out cash flow. Go on to Yahoo Finance, finance.yahoo.com, or go to seekingalpha.com, or really any other stock website out there. And what you can do is when you search a company, some of them will say that a company is paying out a dividend yield. A dividend yield means a company is paying out a cash payment, typically every quarter, meaning every 3 months. I'll write it down for you. If a company is trading for $100 a share and they're paying out a $4 dividend, what that means is typically they will pay you $1 every quarter just for owning this stock. So now, if you buy one share of this company, you spend $100 buying this company, now every 3 months, they're gonna give you a $1 check. If you buy 2 shares, that means every quarter you're gonna get a $2 check because now you have 2 shares of the company, and on and on and on. Now, you're not only getting the dividends. If the company is growing, if they're seeing bigger profits, then hopefully their share price will grow, and over time, they will also increase the amount of dividends that you're paying. So if over time, this dividend goes up to say $8, well, you bought it at $100 and you're still getting the higher dividend. Why? Because you bought it at a lower price. So that's why it can pay and be very valuable to invest in a strong dividend paying company over the long term, because if you get a good company and you hold it for the long term, well then you could see a lot of appreciation in the price of the stock, meaning the value of your asset goes up and the amount of dividends you're making every quarter goes up as well. So this pays you with cash flow because now you're getting paid without having to sell your stock. But now the cash flow, if you're investing in a strong company, will continue to grow because now you keep buying more shares and the value of your dividend, the amount of dividends that you're getting, is growing every single year. That is the goal with dividend investing, and it requires you to find a good company, which is why the research that you put in when you're investing, especially in individual stocks or dividend paying stocks, is so important, because you need to know, how do you find a good company? How do you do the fundamental analysis? How do you research the company, and how do you keep up with the company? If you're unfamiliar with how to do this type of fundamental analysis when you're trying to research stocks, or you want to know more about how should you research stocks the right way, then you can check out Market Insiders. It is an investing education app that I put together where every week you get access to stock, real estate, and cryptocurrency coaching from expert coaches. These are all people who have hundreds of thousands, if not millions, of their own dollars invested themselves. So if you want to try out Market Insiders, you can try it for free. I'll give you access to a 10-day free trial to Market Insiders. All you got to do is click that button down in the description below. 6, you can invest your money into real estate. Now you're probably hearing this thinking, Jaspreet, where in the world am I going to find a home for $3,000 that I can invest in? Now sure, with the $3,000 that you have, even if you leveraged it up, you're not going to be able to go out and buy a home or an apartment complex. But what you can do, thanks to the help of technology, is you can invest your money into real estate funds. Now when I talk about real estate funds, I'm not talking about something like a REIT, a real estate investment trust. Those are companies that trade on the stock market that invest in real estate. I'm personally not a huge fan of REITs, but you can invest into real estate funds with as little as $100 or $10 in some instances through a real estate fund. Now, one example of this is Fundrise. They are a sponsor of Minority Mindset. I'm not going to go too deep into them, but if you are interested in learning more, I'll put their link down in the description as well. But the way these real estate funds work is you have these companies that are going out and buying prime time real estate. These are big apartment complexes or mixed use buildings in the hottest and best neighborhoods in the country. Now these projects cost millions and millions of dollars. And so one of the things that they do is they raise some equity through a fund, a crowd fund, where now you can go out and invest some money into this fund and get exposure to the property. The advantage here is you're getting exposure to real estate, but you don't have to deal with tenants. You don't have to deal with the maintenance. You don't have to deal with the management. You don't have to do anything. You're just getting the cash exposure, and then the investor now takes this cash and then they go and get some debt, and then they go and buy the property, and then they're going to work to improve the property and manage this deal. And then you get your share of appreciation, you get your share of the profits from the cash flow. But again, it comes with the risk now that there's a chance that real estate markets can go down. There's a chance that people won't pay. But if you're investing in a good fund, then you will continue to get cash flow and you will see some upside in your investment, because now you're investing your money into real estate. And if the investors do a good job at improving the real estate, well, then the value of investment goes up as well. So it's an easier way for somebody who doesn't have a lot of cash. I mean, you typically, if you want to invest in real estate, you're going to need at least 6 figures of capital. But if you don't have that type of cash, it's another way for you to get exposure to real estate without having to go through either all the headache and have all the capital to start investing in real estate. The 7th way that you can invest your money is by investing your money into physical gold. Now, gold is known as a store of value. It's not always the best investment per se, because when I talk about an investment is something that's working to produce more value. Like if you go out and invest in a company like, say, Amazon has employees that are working to innovate, create new products, and provide more value, versus gold doesn't really do anything. If you buy a bar of gold, this is going to sit in a drawer and look back at you. So gold doesn't produce more value, but what it does do is it provides you a hedge. Gold is a store of value, and it is an inflationary hedge. If you're not aware, the value of our dollars are going down. That's what inflation is. That's why $1,000 can buy you less stuff today than it could 5 years ago, 10 years ago, or even just 1 year ago. So the value of our dollars are going down versus the value of gold. The price of gold typically goes up when you have more inflation. So I like to think of gold more like insurance. It's kind of like a hedge against a worst case scenario type of situation. And for me, I own physical gold because it's a way for me to save real money. It's a way for me to save hard money, because if I have $50,000 of cash that I wanted to save and I dug it in my backyard, and I also had $50,000 worth of gold and I dug that in my backyard, in 10 years, if I dug these two things up, the $50,000 worth of gold I predict would have more buying power than the $50,000 worth of cash, because I know this cash is going to lose value because of inflation each and every day, versus the gold. When you have more inflation, the price of gold tends to go up. 8, you can invest this money into your own business idea. So I'll give you an example. I started off the Minority Mindset YouTube channel and brand with less than $100. I was recording videos off of the phone that I already had. I spent 20 or 30 bucks buying a tripod. I didn't have any fancy lights. I didn't have any fancy equipment. I didn't have any fancy sound recording software. It was just me and my cell phone. And slowly this started to pick up. And then we hit 100,000 subscribers. And I was like, wow, people actually like watching a weirdo on YouTube talk about guacamole, talk about money. That's kind of interesting. And then I started slowly investing some more money into my YouTube channel. I started buying more equipment, started buying more stuff, built a website, and then we grew even more. Then we grew to 500, 600, 7,000 subscribers. And that's when I realized, wait, there's a huge need for this financial education and this financial news, because I never grew up learning about money. I never grew up learning about investing. I never grew up learning about financial education. These were things that were completely foreign to me. They were actually discouraged. Like, talking about money was completely taboo in my house. I was always told, don't worry about money, don't talk about money. But yet I was supposed to go to school to get a job. That way I could get a paycheck. So it just never really made sense to me. So I went on my own kind of financial education journey, and then this became a place for me to talk about the things that I wish that I would have learned when I was growing up. And then I started using my YouTube channel as a way to start building some of the other businesses that I'm building. One of which is Market Insiders, which I talked about. Another of which is Market Briefs, which is my financial newsletter company, where every day our team breaks down what's happening in the finance and business world, and you get a fun and easy to read newsletter that breaks down everything that you need to know about the news, the financial news, in just a few minutes. Our readers love reading Market Briefs every single day, and this is one of the fastest growing newsletters on the internet. If you want to check it out, just go to marketbriefs.com. But it all started with an investment of less than $100. So if you have a business idea, you have something that you want to do, you have something that you're passionate about, you can use this money to invest and get that started. Now you got to understand, it's risky. Most entrepreneurs fail. Not everybody is meant to be an entrepreneur. But if you have that entrepreneurial bug, if you have that I'll do whatever it takes mentality, this could be some extra cash that you use to start building whatever it is that you want to do. Now the advantage here is there's no cap on the type of returns that you could see when you invest your money in your own business. Like when you invest your money in the stock market or the real estate market, typically you're looking for a 7 to 10% average return on your money over the long term. Now some years will be more, some years will be less, but over the long term, you're looking for a 7 to 10% return on your money. Versus when you invest your money in your own business, I mean, it's not uncommon to see a 20% or 100% or even a 200% return on your money year over year, because now you're working to grow your money. Number 9, you can use this cash to invest in your education, which can help you earn more money, but you have to make sure you're investing your money into the right education. I say that education is the backbone for your financial success, but you have to know where your education is coming from, because a lot of times we assume that education means school, but that's where your education starts. That's not the end of your education. When I graduated school, I went through college, I went through law school, I didn't learn a thing about money. I knew nothing about how to invest my money through school. My real education started after I was done with school and everything that I did outside of school. So when I talk about investing your money in your education, I'm talking about investing in your financial education. How do you build a business? How do you build a side hustle? How do you invest your money? The easiest way to start is obviously YouTube, because it's free. YouTube is decentralizing education, which is why I love YouTube so much. You can learn anything you want from whoever you want. If you don't like the way I talk, you don't like that I talk about avocados and guacamole, you can watch somebody else. But if you like me, you can watch my videos for free. Then you can go and read some books. Now, I don't have any books published, but you can go and read other people's books about investing. You can read books about business. You can read books about entrepreneurship. This will start opening your mind. That way you can dive deep into somebody else's mind, and then you can go even deeper. You can start purchasing people's classes on the internet. Now, I know there's a lot of bad classes out there. There's people selling this get-rich-quick idea, but there are some good classes on the internet. And the classes that you look for should be from one, somebody that you trust, somebody that's doing what you want to do, and somebody that's teaching you something that you want to learn. Like if it's a class on 6 steps to earn 6 figures a year, chances are the class is not very good because it's not teaching you anything specific. But if it's a class on how to invest your money in the stock market through fundamental analysis, well, that's a lot better because now you're learning something specific, and if you have a good teacher, then chances are it'll be a good class. And finally, last but not least, is number 10. The 10th place where you can invest your money is your health. So if you've been watching my videos for a while, you know that I've talked about something called the quadruped triangle. This is something that I label as the 4 fitnesses to life. If you want to live a very fulfilled life, you have to understand these 4 fitnesses. At the bottom, you have physical fitness. Then you have mental fitness. Then you have spiritual fitness. And then you have financial fitness. Everybody assumes that if I have more money, it'll solve my problems and I'll be happy. But you have to understand how money plays a part in your life, because this is why so many people don't understand money. It's the reason why so many people are scared to talk about money, and it's the reason why so many people are so discouraged by money. So the first thing you have to understand is you have to be physically fit. Now, this doesn't mean you gotta have a 6-pack, but if you're morbidly obese, it doesn't matter if you have $1 million. The only thing you care about is being healthy. So if you're really physically unfit or you're not healthy, you gotta take care of that first. Invest in your physical health. Get a gym membership, do whatever you gotta do, find better doctors, take care of your health, because it doesn't matter what else is going on in your life. You only have one body. If you don't take care of it now, it's gonna be even more expensive and even more painful and even more miserable later on. Then is your mental fitness. If you're struggling with anxiety, if you're struggling with depression, if you are not happy, it doesn't matter if you have $10 million. More money is gonna make you more miserable. You have to take care of your mental health. And I'm very happy that mental health is becoming an easier topic to talk about. So do whatever you need to do to invest in taking care of your mental health. You know yourself. If you don't feel happy, do something about it. Do whatever you need to do and spend whatever it takes. Maybe you hire a therapist. Maybe you have to go into rehab. Whatever you have to do, do it. Because if you don't take care of it now, it's gonna get worse. Start investing in your mental health. Then it's your spiritual health. Now, a lot of times when I say that, people assume that I mean religion. It doesn't have to mean religion. It's what's your purpose in life. And so if you don't have a reason to get out of bed every single morning, you're not going to feel fulfilled even when you have money, because now you're gonna feel more empty. You're wealthy, but you don't have a reason to get out of bed. What are you here for? So you need to invest your time, maybe some of your money, to figure out what your purpose is. Maybe that means you have to travel a little bit. You need to go out and explore. You need to see what you like, what you don't like. Where can you impact the world? Why are you here on this earth? You need to invest in these things, because if you don't have these things, more money is just going to make you more miserable. And then at the top of the quadruped triangle is your financial health. Now, once you have this base, this is where having more money can make you more happy, because you're living a fulfilled life. This is where now you can invest in your financial health. That's everything else that I've been talking about. The first 9 items are focused solely here on your financial health. But here, when I talk about your health, investing in your health, I'm talking about this. How can you invest in your physical health, your mental health, your spiritual health? Because if you are a multimillionaire, but you're miserable, or you're on your deathbed, or you feel like you have no purpose, what's the point? Right? The whole point of having money is to be able to live a more fulfilled life, to take care of people, to give back, and to live a fun life and do the things that make you happy. But in order for you to do that, you have to be willing to invest here. If you enjoyed this video and you want to see which 3 investments you need to make right now, that way you never have to worry about money again, watch this video right over here. Thank you for watching, and as always, keep hustling. My goal with real estate is cash flow. I'm working to create income. So when I invest in real estate, I don't care about what's going on with property values. What I'm looking for